All right, today I want to place some put options. I want to sell some put options today on some stocks that I want to acquire. But instead of buying one stock of it or buying 100 shares outright, I'm going to use the strategy of called selling a put. And if I sell one put option, that means that uh, and if it goes through and the stock dips below the price that I bought it at, the strike price, then that means I will receive 100 shares of that stock. Okay, so one of them I want to get into is YMAG. Let's see how that's doing. So past 3 months, it's been sliding, but it has found resistance at around like 12.50, $13 around there. I can get into that stock. Okay, so what I'm going to do is click trade options, put it out for about a month from now. Actually, today's May 20th, 2025, so it's exactly a month from now. These are all the strike prices, and I have my options set to sell and put. And I think let's check out the $13 put. Okay, you can see volume is 0, so no trades made. Open interest, we got 6 people out there who want to get into or out of this option. So it's very low. What about the $14 put? Okay, this one's actually has some volume and it's trading. You can see that last one traded at $20. Our bid is at $10 and our ask is at $25. So maybe I can sell a put for, well, let's call it 20 cents. So I'm going to click sell. We'll do a few of these. Maybe 3. Limit price 0.20. Okay. And you can see over here it says medium fill likelihood. That's fine by me. If you click in the top right corner, it says limit order. In time and force, you can either set this for good for day, which means that if it doesn't fill, it'll cancel at the end of the market. I like to do these for options because stock prices are always changing. Therefore, the options market is always changing. Time decay is a factor to consider, and that's going to be changing the prices of these things. So I usually do a good for day on these things. Or if you want, you can say good till canceled, saying, I want to buy this for 20 cents an option, and you're going to keep it for 90 days. Maybe that's good for if your option is really far out in terms of time. But I like to do the good for day option there, and you can always replace it the next day. It's not going to hurt anything. Okay, let's click review. I like how it gives you an explanation of what's going on. So if I go and I want to put in an order to sell 3 puts of YMAG at the $14 strike price, it expires on 6/20, and it's 20 cents for the price. And estimated credit, it shows you 20 cents. times the 100 multiplier, which one stock option represents 100 shares of the underlying stock, and then the Robinhood or someone takes that 4 cents regulatory fee. I think it's the options clearing board. So that's gonna equate to almost $60. And they're gonna hold on to $4,200 of your cash in order to make that purchase if it goes through. So summary at the bottom, you're agreeing to buy 300 shares of YMAG for $14 each before on June 20th. If you aren't asked to buy YMAG by then, you'll keep your collateral and the full $60 credit. So $60 credit goes to me because I'm getting paid to take on that risk of saying, yes, I'll buy 300 shares of YMAG for $14 each. That can be risky because if YMAG plummets below $14, I'm stuck still buying it for $14 each, even if the price went down to $10. So if you didn't do anything with options, you could have got a deal at the $10 price. But if you go in and like this and it goes below that, you're forced to buy all those shares for $14 each. But on the other hand, I do want to get into this stock because it pays good dividends, and I might as well get paid a little extra on top, that $60 credit, for taking on that risk. So that's why I'm going to do this. Swipe up to submit. It's in order. All right, so the order is pending. Now it's placed. It's not filled yet. It's just placed. And if it's not filled by the end of the day, it'll be automatically canceled, which is fine by me, and we can just do it again tomorrow. So click done. All right, there's something else I want to get into. Yield max, YMAX, okay. What's it been doing recently? Kind of same pattern. Goes down, finding resistance at around $11 and then bouncing back up. I'm gonna click trade options, go a month out, selling a put. Let's see, $12. Hey, there's some volume in there. There's some volume, there's some interest. We might could do something there. All right, let's click sell. Let's do a few of these. 0.05 review. All right, so you're agreeing to buy 300 shares of YMAX for $12 each before or on June 20th. If you aren't asked to buy YMAX by then, you'll keep your collateral and the full $15 credit. All right, sounds good to me. Let's submit. Wow, look at that. So up here at the top, it said YMAX order pending, and then now it says filled. So at that price, at that strike price of $12, at that limit price of 5 cents a contract, it went through. So I'll click done. Great. Okay, so now that option is active. I bought 3 contracts. I sold 3 puts. So if the stock price dips down to $12, it will likely automatically make that purchase for me to buy 300 shares of YMAX at $13. And that's one way I can get into the stock. Yep, all right. And I got $5 per contract for doing it, so about $15. I also want to get into pay. That's a good one. It pays dividends. Let's see. Yeah, let's look at how that's doing. All right, around $20. It fell off a little cliff there, but it is finding resistance at around $18. Bounce back up. Okay. Click trade, trade options. Going a month out, selling a put. $18 strike is where it found resistance last time in recent time. But you can see volume is 0, open interest is 0. If you attempt to place a trade on this, no one's buying or selling. So we're going to have to bump up that strike price a little bit. Let's check out the $19 put. No volume, very little interest. Okay. Well, let's look at $20 put. You can see the chance of profit is around 78%. This one has a little more interest. Let's see. Bid is 10 cents. Ask is 25 cents. Last trade at 0.17. Yeah, okay. Why not? Let's see. Let's do a few on this one. I don't know. Let's try 0.20. Medium fill likelihood. Click review. Yeah, okay. So you're agreeing to buy 300 shares of pay for $20 each before on June 20th. If you aren't asked to buy pay by then, you'll keep your collateral and the full $60 credit. All right, let's do it. Pending, placed, not filled yet. So maybe this will be filled by the end of the day. Maybe it'll be canceled. We'll see. Click done. Go back to home. All right, my buying power dropped because I just placed a lot of orders here. Go down to the options section, and these are the pending orders. The pay, selling 3 puts to open those up. YMAG, selling 3 puts. Positions held. Iron, I already had from a previous position. YMAX, we just put that in today. So that's all the trades I want to do today, and we'll see what happens with those options. Markets close in about a half hour. Thanks for watching.